The dollar versus Swiss, like other currency pairs, is seeing dollar bullishness in price action today as a result of comments from Treasury Secretary Bessent and President Trump early in the Asian session today. What has that done to the technicals? I'll talk about in this video, so let's get started. In my video yesterday, I pointed out how the 50% retracement of the move up from the December low to the January high had stalled the fall, and we were moving back to the upside. We needed to get above this swing area to increase the bullish bias, and you can see in trading yesterday that initially we found resistant sellers against that swing area, which forced the price down to the low of the swing area, and then we broke above it toward the close of the day, but held below the 38.2% retracement right here at 0.90209. Well, the comments from Trump and Bessent took the price back above that level, and we started to see the sellers turn to, more to buyers as the battle between the 38.2 and the 50% retracement was won by the buyers, and that pushed the price back to the upside. And since then, we've seen the price move back above the 100-hour moving average. That's a blue line in this chart that comes in at 0.90528 in the European session. We have seen the price stay above that level. We did have comments from Swiss National Bank officials saying that, well, rates could go negative, which underscores the weakness or the potential weakness of the Swiss franc versus the U.S. dollar, given the U.S. Federal Reserve is meeting today and likely to keep the rates unchanged. And with the threat of tariffs, increasing inflation, that it'll make Fed policy difficult. But technically speaking, if the price can stay above this 100-hour moving average right now, that would be the most bullish scenario. And then we start to look at the 200-hour moving average up here. Recall from last week, the price high on Thursday's trade came right up to the 200-hour moving average, found willing sellers against that level, forcing the price to the downside, where we used the 100-hour moving average resistance in trading on Friday and tried to use that level as resistance again in trading yesterday before moving to the downside. So getting above that 200-hour moving average of 0.90768 would be more bullish for the dollar versus Swiss in the short term. If it's staying above the 100-hour moving average, keeps the buyers in play, and battle between the 100 and 200-hour moving average, the battle of the day for the dollar versus Swiss from a technical perspective. Move below the 100-hour moving average, and we'll rewatch the 38.2% retracement, which also happened to be near swing levels right here. So pay attention to that at 0.90209 on further selling. That's my look at the dollar versus Swiss. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.